Financial statement analysis. Financial statement analysis focuses on evaluating the quality, comparability, and usefulness of financial reports for investment decision-making. Candidates study how accounting standards, management judgments, and reporting choices influence financial statements and financial ratios. The curriculum emphasizes interpreting financial information under both International Financial Reporting Standards and US GAAP, particularly in areas involving inter-corporate investments, multinational operations, and financial institutions. Candidates learn to identify accounting distortions, assess earnings sustainability, and adjust reported figures to improve comparability among firms. Strong analytical skills in financial statement analysis help investment professionals better understand a company's financial condition, profitability, and risk exposures. These concepts are essential for equity valuation, credit analysis, portfolio management, and the evaluation of management performance. A major component of the curriculum examines inter-corporate investments and their effects on financial reporting and valuation. Candidates study accounting methods for investments in financial assets, associates, joint ventures, and business combinations under IFRS and US GAAP. The curriculum explains how acquisition accounting, consolidation methods, and equity accounting influence balance sheets, income statements, and financial ratios. Candidates also analyze special-purpose entities and variable interest entities to understand how companies may structure transactions to manage risk or alter financial presentation. Understanding these accounting treatments is important because different reporting methods can significantly affect profitability measures, leverage ratios, and cash flow analysis. Investment professionals must therefore evaluate the economic substance of transactions rather than relying solely on reported accounting outcomes. The curriculum also addresses employee compensation, including post-employment benefits and share-based compensation arrangements. Candidates analyze defined benefit and defined contribution pension plans, pension obligations, actuarial assumptions, and the effects of pension accounting on corporate financial statements. Share-based compensation, including stock options and restricted shares, is studied in relation to earnings dilution and valuation impacts. The curriculum explains how analysts forecast compensation expense and estimate future shares outstanding in financial models. Understanding these issues is essential because compensation structures may significantly influence profitability, leverage, and shareholder value. Analysts must evaluate whether reported compensation expenses accurately reflect economic costs and determine how compensation policies affect incentives, long-term performance, and overall financial sustainability. Multinational operations represent another important area of financial statement analysis because many companies operate across multiple currencies and jurisdictions. Candidates study foreign currency transaction exposure, translation methods, and the effects of exchange rate fluctuations on consolidated financial statements. The curriculum compares the current rate method and the temporal method while examining how each affects reported earnings, assets, liabilities, and financial ratios. Candidates also evaluate accounting issues associated with subsidiaries operating in hyperinflationary economies, and assess how multinational operations influence effective tax rates and sales growth sustainability. These concepts strengthen the ability to interpret global financial statements and understand the impact of currency movements on corporate performance. Analysts therefore develop stronger insight into international business risks and the quality of reported earnings. Evaluating the quality of financial reports is a central objective of CFA Level 2 financial statement analysis. Candidates learn frameworks for assessing earnings quality, cash flow quality, and balance sheet quality using both quantitative and qualitative indicators. The curriculum explains sustainable earnings, mean reversion, accrual analysis, and potential red flags associated with aggressive accounting practices. Candidates also evaluate management incentives and reporting choices that may reduce transparency or distort economic reality. Financial institutions receive specialized analysis through frameworks such as CAMELS, which assesses capital adequacy, asset quality, management, earnings, liquidity, and sensitivity to market risk. These analytical approaches help investment professionals determine whether financial statements fairly represent economic performance, and whether reported financial results can be relied upon in valuation and investment decisions. Overall, financial statement analysis in CFA Level 2 develops advanced skills for interpreting corporate financial information and evaluating the reliability of reported performance. The curriculum combines accounting knowledge, ratio analysis, valuation adjustments, and qualitative assessment techniques to strengthen investment analysis capabilities. Candidates learn to identify biases, improve comparability across firms, and assess how accounting choices affect financial statements and valuation outcomes. These skills are critical for equity analysts, credit analysts, portfolio managers, and investment professionals who rely on accurate financial information to make informed decisions. Strong financial statement analysis enables professionals to better assess profitability, risk, liquidity, and sustainability while supporting more accurate valuation models and long-term investment recommendations in increasingly complex global markets.